Hi, this is Scott Murray, and welcome to the Daily Economic Market Shout for Tuesday, December 13th, 2022. It's great having you with me here today. And inflation. Better news. Rose 0.1, core 0.2. So we are seeing the movement down. Overall, year-over-year inflation is starting to back off to about 7%. It almost kind of had to, because it was really last year in the fourth quarter that we saw the ramp up of inflation. And it's taken that whole year, and we continue to have solid prints for the fourth, the first, and the second. Third was actually relatively flat. However, it didn't move the needle because the third quarter of 2021, was benign. So we're starting to anniversary the larger prints, and that means that we have a moving down of overall inflation. Let's dive into the monthly numbers to see what trends we can see. Services 0.3. So it is running. 0.3 is almost 4% on an annualized basis. That's still running a little hot. We like to see inflation. The Fed's target is 2. We think it's going to run long-term between 2 and 3, because I think there's been a sizable change in how inflation, the supply part of the economy, is functioning, and it will take a really long time to ease that burden. So 3 is a pretty good number, but if we're running near 4 on the services, and the services is the largest component of it, we still have some work to do, even just looking at this monthly number. Non-durables, 0. Good. Durables were the decline, almost a 1% step back. Not too surprising, given what we've seen with the auto sales and what we've seen with used car prices falling. So we are starting to work our way back. No, we're not going to see price decreases. We are going to see some better pricing environment. And I think that is going to be helpful to the market as we move forward. The market right now is expecting about 2 to 2.25% inflation. That's where we're looking at the tips, and we're comparing the tips yield to the nominal yield. We think it's going to be a little higher than that. So we think that that may be an opportunity that's out there. No guaranteed, of course. But we should note that also we think with the economy doing better, we've seen some good anecdotal evidence, particularly this month. We see buying purchases doing well, and we should get an update on both Empire, which is the first Fed survey that's out of New York, that comes middle of the month for the current month. And then, of course, retail sales, which is really that first movement towards the holiday season, how the consumer is doing. We think it'll be a healthy consumer holiday season, particularly that we've seen some easing in the gas prices. And I think that'll help the consumer moving forward. So net, yes, movement forward in inflation, that is helpful. It gives the Fed a chance to kind of ease off the gas, which we expect them to do tomorrow, and only raise interest rates 50 basis points versus the consecutive 75 basis points rising that we've seen. So good news for the U.S. consumer, good news for the U.S. economy. It looks like this recent bout of elevated inflation is passing. Still, housing up 0.7 on rents is still going to hold back the economy. And that's what transpired in that service number. So it's worth keeping our eyes on. It's not a complete victory lap, but we're seeing positive signs moving forward. Scott Murray, the Daily Economic Market Shout. Thank you for joining me.